and founder of Homeowners for Justice. And boy, did things happen over the weekend. It is truly amazing, and we can take heart because it is working. We need to just keep pushing. So there's a whole lot of news I'm going to cover. I really feel you need to hear what I've been hearing from some video clips. And so I'm going to zip through the information that we got to keep up on. We need to know what's going on at all levels of government. So we're going to talk about Pritzker. This is an Obama bundler and a longtime subprime mortgage predator to be named as Commerce Secretary. We're going to talk about that. We're going to talk about the independent foreclosure review payments. And also a contact sent me some information about HARP 2. It's an article, oh my goodness, how it protects current servicers from fraud. Oh my God. Oh my goodness. And then mortgage down payment requirements, other bank compliance issues, other lawsuits, foreclosure blight. These are the ongoing ramifications, natural and logical consequences of the structure that's currently existing, as you and I both know about it. But you've got to hear Matt Taibbi and Max Kaiser talk about the facts that banks are now criminal gangs worldwide. They make other mobsters look like beginners. And it's really cool. NBC Investigates has completed a 9-month investigation. There's several little clips we're going to listen to. And then I want to have your help in demanding a statewide grand jury. I started this effort last month, and it's not happened yet. So help me push. And there's some other things that I can bring to you, that connections that we made on Saturday at the parade. So I'm real excited, as you can probably tell. And let's get started. I truly believe that we're going to be able to get some mainstream media attention. That has been one of the huge problems we've felt that we experienced. So let's start with Penny. Penny Pritzker to be named Commerce Secretary. I don't want to deal with this a lot, but I do want to show you where I've linked information on my Homeowner for Justice site. And if you go to Homeowners for Justice, HOFJ.org, and you look down under fraud and corruption, and you pick corrupt officials, then you're going to get this page. And as you scroll down, I basically wrote this months ago, have added some more current things at the top. But if you go down into why the fix is in, why the people haven't gotten justice for years, in November 2011, I initially hit it. Well, Henry Paulson, he lies to Congress. He tells the hedge funds in advance so they can make all kinds of money about Fannie and Freddie being picked up, by the government. And this is the point. It is a revolving door. We've been talking about it. Here's the links of all these articles, 14 articles on, the fix is in. And then, of course, down here, I really want to remind you again, if you want information about the foreclosure crisis and why I say some of the things I say, this is the background. This is the information where I've gotten this from. So you've got Reckless Endangerment by Gretchen Morgensen, a documentary of Jim Johnson, how corrupt he was at Fannie Mae, how he's led everybody down the garden path, and his punishment is now he's CEO at Goldman Sachs. And here's the front line, Money, Power, Wall Street. This is, just take a look at the third hour, minute 15, how greed in Wall Street and government corruption broke Main Street. I mean, it's all documented. We need to keep pushing to bring this to a head and get some justice for the people. And of course, here's Penny Pritzker, and she's involved in the subprime mortgage crisis. So, just for your information, there's all that information. Of course, the economy may stink for you and me. Main Street sucks. We can't get loans. Our income has dropped. Businesses are going bankrupt right and left. Commercial properties being foreclosed. Homes are being foreclosed. But of course, the market doesn't care because QE3 and it's all the hedge funds and it's all the automated trading. It's all of the big investors and the banks that are making the money. Moving on, here's from the Office of the Comptroller of the Currency. Here's their website talking about the independent foreclosure review payments. So far, they sent out $1 billion. Here is the announcement that the third wave of 927,000 checks totaling 794 million was sent today. And let's see, today is what day? The 26th. So that would have been Friday. And they're going to continue to send out until they hit the 3.6 billion in payments. The first wave of checks was sent April 12th, and of course you and I know that they bounced. Here's information to the institutions, and then if you're a borrower and you have any questions, you can contact the paying agent, which is Rust Consulting Inc. Wouldn't that be interesting to know how did they get that business and who owns them? There's a thought. There's a question. So here's the phone number. You can call them Monday through Friday, 8 a.m. to 10 p.m. Eastern Time. And you can contact HOPE, Homeowners HOPE, with the phone number or the makinghomeaffordable.gov and get questions answered, hopefully. We're just a little skeptical about that for the homeowners, of course, because, of course, the banks, the servicers got $2 billion. The homeowners get $300 for losing the house. I mean, come on. What more needs to be said? Well, we're going to listen to Matt and Max say that today. I love it. And this is the HARP 2 article I wanted to talk about the fraud protection. As you scroll down, you can read the rest of the article, but this is two key changes between HARP 2 and HARP 1. The first and second versions. First, unlike its predecessor, HARP 2 allows borrowers with mortgage insurance to qualify for a refi. So that opens it up to a lot more borrowers. But here's the most important thing. The new loan originator, is relieved of responsibility for anything that happened on the first loan. If there was massive fraud on the underwriting of the first loan, the new lender is not responsible. They're only responsible for any new fraud that occurs. Are you as speechless as I am? If they know there's massive fraud on the underwriting of the first loan, then why aren't they making it right? This is insane. They're trying to cover up the fraud and just saying, oh, fraud doesn't count. Just never ever forget. If it was you, if it was me, we'd be in prison and we've lost all our assets and our families would be homeless if we committed this kind of fraud, even just one or two of these documents. And they have fraudulently underwritten, obviously, millions of loans. They're talking about if there was massive fraud in the underwriting of the first loan. Come on, guys. We have got to keep raising the roof on this. This is just outrageous that the articles are talking about it. Oh, well, it's fraud. Nothing we can do about it. I think not. We want criminal investigations, and that's where I'm headed today. Okay. Next issue. I'm jumping through the issues real quick so we can get to the meat of the meeting today. They're talking about new down payments, and here's the point. The discussions are saying, they're blaming, false blaming. And this is the other problem. If they don't really know why the loans blew up and failed, then how can you fix it? So people are saying, it must have been low down payments, so we need to raise the down payments. It wasn't so again, I have felt from the beginning, they were, my mom said, here goes mom's comments, if you don't point your finger, because when you point a finger at somebody else, 3 fingers are pointing back at you. So the banks, when loans started blowing up, they started pointing fingers. Oh, it was those bad appraisers. Oh, it was those loan officers. Oh, it was the borrowers. It was somebody else. And yet 3 fingers are pointing back at the banks. It's the bank's fault. So the fact of the matter is, the facts are these. It is not necessarily material the down payment. It is material if the loans are going to blow up on you. And it's material if you are writing that loan in the middle of a humongous balloon that they created by fraudulent loans. And then, of course, when the loans blew up because it was fraudulent underwriting and it was fraudulent inducement to get 72 million borrowers to sign on those loans because they couldn't get anything else. They had to take that. The banks, mortgage companies structured it that way, intentionally meant to blow up. So if you don't have all that fraud, then the loans aren't going to blow up and they're not going to put people underwater, and the people are going to be able to pay when you don't ruin the economy over it. So the banks create fraudulent loans, they blow up the prices fraudulently, then they foreclose fraudulently, they ruin the economy, which destroys small businesses and all the homeowners. They can't make their payments because they've lost their business and their income. And everybody's now laying off people. Don't tell me it was down payments. And that's the end of my little tirade on that one. Okay, so another couple of quick little articles about bank problems. Well, they're struggling to recruit enough compliance experts. And of course, again, my comment is, if you just did it common sense without trying to cheat everybody, you'd comply, because the compliance, the rules are basically stop cheating, stop doing this, stop doing that. And now they're looking for more people that can, I'm real cynical, it's my opinion, that can help them figure out how to work around these compliance rules. That's why they're struggling to find experts. Sorry. Okay, next. Deutsche Bank can't shake LA claims over foreclosure blight. Well, yeah, and we're talking about thousands and thousands of homes, 2,000 properties in LA, and of course, they're becoming a big slumlord. Gee, what a shock. And the fact of the matter is, there are laws. The Homeowner Bill of Rights gives people and cities and entities the right to force banks to stop being slumlords. The trouble is, it's all the burden. This is the trouble with the Homeowner Bill of Rights. It gives people the right to sue. The trouble is, that means the people have to sue. That means you and me, the cities, our counties, everybody that's under pressure with reduced incomes and tax revenues, we're now the ones that have to force the banks to do the right thing. It's completely backwards. It's completely backwards. The law should have been written, if you don't do the right thing, we're going to throw you in prison. And then, it'd be very simple, because the law would be right there. Oh, you blew it. You didn't do the right thing. Boom. We don't even have to go to court. It's just done. And this is why I'm pushing for a statewide grand jury. We've got to get the enactment of our laws off the backs of the people that least can afford it. So here's another one, of course. JP Morgan and Citibank are now being sued over mortgage loans that they sold. They were sued by Integer Program LLC for losses because Integer claims the bank breached a 2007 mortgage loan purchase agreement. Oh, I'm sure they did. We already know they did. Okay, let's watch and see how they escape that. And again, there's lawsuits, continuing lawsuits on the investor side. We need to get some clout on the homeowner side. I've just been anxious for you to hear this. Oh my goodness, this is so fabulous. This is between Matt Taibbi and Max Kaiser on the Kaiser Report. This was published just last week, the 19th. So that would have been a Friday, 2 Fridays ago, from a week ago last Friday. And I want to just mention here that Taibbi is going to be the keynote speaker in the Public Banking Conference. That's June 2 to 4. And I'll talk more about that probably on Wednesday. I really wanted to focus on this and the statewide grand jury because that is the focus of today. We have to to collect these people and collect our effort. And I've got a couple of really cool ideas. But let's listen to Matt and Max. It's really cool what they're saying. And this is the problem. They're facing it too.
Hi, I'm Max Kaiser. Welcome back to the Kaiser Report. Special in-studio guest, Matt Taibbi. Matt, welcome to the Kaiser Report.
Nice to see you.
Great to see you, and of course, reading all your stuff in the Rolling Stone. And first of all, just a quick question. I mean, you're writing all these stories about banks and what's going on Wall Street, but are you writing about finance, or are you writing about crime stories, basically?
It's funny, the lines have gotten so blurred. It's basically an organized crime story, and that's what I'm trying to do lately, is just convince readers that it's not really an economic story or a finance story. It's organized crime. There's no difference at all.
Yeah, I mean, the language that people use, the bankers, it sounds so highfalutin, and they use these credit default swaps and derivatives and collateralized debt obligations, but they could just as well be talking about, whacking a guy behind the dumpster at Sparks.
Totally.
Essentially, it's the same thing. So you write, gangster banks keep winning public business. So they're in the business of doing the business of the public, in essence, and even though they're clearly violating the law, they're continuing to get these contracts. So tell us about it.
Yeah, and this is an example where it's exactly like the old mafia business. In the old days, we had municipal bid rigging, and it was a mafia group that would prey upon some local municipality, and the different mafia groups would divide up between each other which town they got to service their garbage, who got to service the laundry here, who got to do this and that, the cement, the construction. And that's exactly what we have with modern investment banking. All these investment banks have essentially divided up their territory. They are artificially lowering their bids for investment banking business. So a town goes out and it wants to issue a bond, and all of the banks, all of them, the usual suspects, Bank of America, Chase, they're all colluding to submit artificially low bids, and everybody's losing out, and it's exactly the same activity that we had with mafia groups. It's just that it happens to be bonds instead of garbage.
Well, or junk bonds, as they're called.
Right.
Garbage bonds, right?
Exactly.
So now another interesting aspect of this is that the mob has gone global, the Wall Street mob, and you see in Casino, Italy, there's a big story recently, and you've covered this extensively.
Yep.
So a couple of highlights there. Again, give the globalization of this.
Absolutely. That's one of the problems with prosecuting this kind of crime, is that it's so cross-territorial and cross-jurisdictional that there's no one law enforcement body that can really aggressively prosecute this kind of crime. And they also have a tendency to go regulatory shopping. Essentially, they seek out the areas where the regulations are the weakest, or the regulators who are the weakest, and that's where they'll base their operations so that the laws are less powerful. So it's very, very hard to nail them down for things like these swap manipulations, or the really big story, I think, that hit this year is the manipulation of LIBOR, which is this new burgeoning case that's coming out, and nobody really knows where they're going to prosecute that case. Yeah,
that story, and I don't know if you follow this one or not, but Bank of New York was caught in a multi-trillion-dollar custodian business for pensions and whatnot. They were stepping in front of all the trading, the foreign forex, and just scalping the pennies, billions and billions. And now they're saying, well, we're not sure we can prosecute that story.
That's like Office Space, that movie, right? Exactly. One penny at a time, but you do it a million times, right?
Well, that's an interesting. Now, Rolling Stone, of course, is a pop culture magazine, and you go back to the Hunter S. Thompson days, the coverage of the politics of the 60s and the Nixon. And there you are, you're in the magazine, and the writing is different than you're going to find in the Wall Street Journal or Financial Times, because you bring in a real literary sense to it. It's great to read, even if you're not interested in the details of the stories. It's well written.
Right.
So as a writer, what are the challenges? It's kind of a bit of a tangent story, but I've always wanted to ask you this. As a writer, when you're talking in this space, because the material is so opaque, and the crimes are, when you talk about inflation, it's a crime that no one is really aware of happening. It's creeping.
Right. It's all around you.
How do you deal with that? I mean, as a writer, as a journalist, and go through your thought process on that a little bit.
Yeah, it's incredibly complicated and challenging because and this is part of the reason that these guys get away with as much as they get away with, because the instant you try to explain some of these crimes, you can't do it in 1,000 words. You can't even do it in 3,000 words. It takes sometimes 6, 7, 8,000 words to explain how manipulation of the municipal bond market works, or what AIGFP was doing before the crash, and all those things. So the first thing that I try to do always is I try to connect the activity to a real world consequence. So I'll find somebody who actually ended up losing money, and then I'll try to sort of connect that consequence to the crime. So for instance, in Jefferson County, Alabama, you start with somebody who got laid off, or somebody who had to pay a sewer rate that was 5 or 6 times what it should have been. And then you kind of work back from there, and you show how JP Morgan Chase's decision to sort of bribe its way into the lap of the local infrastructure resulted in that person having to pay all that money. So it's definitely a challenge, though. I mean, you yourself know the verbiage and all is a camouflage for all these crimes, and it's very, very difficult to sort through.
And the crisis that happened in 2008, the result of this was not any reform, but that the too big to fail got even more too big to fail. They got too bigger to fail.
Yeah.
Let's talk about it specifically, a piece that you've written, Bank of America, Too Crooked to Fail. Mm-hmm. So it's another fantastic, home run piece. Walk us through it a little bit, talk about it.
Yeah, what we just tried to do with this piece is kind of walk people through what the consequences of too big to fail are, and what it really means. What people don't understand is when these companies get this big, and Bank of America, let's just back up, Bank of America should have gone out of business in 2008. They made 2 catastrophic decisions back during the crash. One was to acquire Countrywide, which is the giant subprime lender, and the other one was when they were essentially forced to acquire Merrill Lynch. So they had these 2 gigantic albatrosses around their neck, but instead of putting it out of business, conversely, it had the opposite effect. The company got so big, so artificially big because of these acquisitions, that now we couldn't let it go out of business. And now we're stuck with this company. And essentially, no matter what they do, no matter how many different kinds of ethical misdeeds they get involved with, we really don't have a choice anymore but to slap them on the wrist, kind of hope they get better, and continually bail them out. And this is what we tried to show in the piece. We sort of just listed all the different things that they're involved with, from municipal bond manipulations to rigging LIBOR to all the mortgage-backed securities ripoffs that these guys were involved with, ripping off the HAMP program, the Obama's mortgage program, ripping off people who have prepaid Bank of America cards to get their unemployment insurance benefits. And it's just one scam after another, but we have to turn the other cheek and just sort of let it happen.
What about mainstream media like CNBC, which is cable network dedicated to the ticker tape, basically, and is cheerleader for all this? So you've got like a Warren Buffett will come on, who's celebrated as America's sweetheart billionaire. He's got a big position at Bank of America, Wells Fargo Bank. He's directly involved in this fraud.
Right.
Wells Fargo Bank, the story with the drug laundering of the Mexican cartel.
Right.
Wachovia, who was acquired by Wells.
Right.
Hundreds of billions of dollars, directly connected to the money changing in Mexico. 22 tons of cocaine is basically what that covered.
Wow.
And so you have a Warren Buffett will go on CNBC. He's investing in these companies.
Right.
But plays his ukulele.
He's the great genius, the oracle. Right.
Yeah. Again, from the pop culture side, the Rolling Stone side, you go from Jimi Hendrix playing Star Spangled Banner at Woodstock to Warren Buffett playing a ukulele at his annual meeting.
Right.
And people are celebrating that as a milestone in cultural, achievement. How did we get this far down the slide? What happened?
It's amazing. I remember. I grew up in a family of journalists, and I remember when I was a kid, reporters hated powerful people. It was just sort of a thing that was part of this business. We had a thing. We wanted to stick it to the man. If he was doing something wrong, everybody kind of they thought that it was their role to kind of take people down a peg when they got too big for their britches. But I don't know if you have the same experience, but in our business, something's changed. There's a completely opposite dynamic now in the media, which is that we worship powerful figures, we grovel and slobber at their feet. And it's been a terrible thing for America because there's nobody really asking these questions. And these guys are allowed to get away with a lot more because they have the presumption of correctness every time they come out with some new horrible scam. They're always given the benefit of the doubt by reporters, and it's an unfortunate thing.
Yeah, and whistleblowers are being attacked. This Obama administration, but much more than any other administration in history, is attacking whistleblowers.
Right.
And journalists are under attack all over the world. They're stopped at borders in our own country, in the U.S., and it's become, as you say, the dynamic has completely changed.
Right.
But let me just want to touch on this John Corzine scandal and the MF Global, because here is kind of a new chapter, because what we have discovered is that this Corzine scandal, he reached into customer accounts.
Right.
And he took money that segregated customer money. So it's not just billionaires playing with each other in ways that ultimately do cause problems.
Right.
This was a direct...
This is just stealing.
Stealing.
Yeah.
No way to around it. But Corzine is... nothing has been brought against him.
Right.
We'll talk about this.
This is an incredible thing. I was just out in California last week, and I'm doing some research about how we prosecute, say, welfare fraud in America, right? And there was a case that I heard about where a woman who was on welfare, she was on public benefits, and she used public daycare at a time when she was not allowed to use it, and they prosecuted her for fraud and put her in jail because she used the government service at a time when she wasn't supposed to, technically, right? So we actually put people that they make 40 or 50 felony cases a month in these California counties against these very, very small time people. But John Corzine, he steals how many hundreds of millions of dollars it was? I mean, and again, it wasn't a sophisticated operation. It was just like you're talking about. It's like when a businessman gets desperate, he reaches in and embezzles his own company to pay off a drug habit or whatever. That's what this was. How is this guy still walking around? How is there no case? It's worse than the Trayvon Martin thing. Well, in a way. I mean, it shows you we live kind of in these two different worlds where there's one set of rules over here and one set of rules over here.
Well, to make the Trayvon Martin comparison, here's a guy who's getting murdered in the street openly, right. And here Corzine is committing a fraud openly in the street, in the glare of the spotlight.
Right.
And people are wondering, well, is it really a crime? There's a similarity there. Like someone just got murdered in the street, and people
right.
are wondering, I wonder if that's wrong.
Right.
And here you got Corzine. He just he just stole this money. They're like, is that wrong? Well, finally, Matt Taibbi, given the arc of the story here, do you think you're going to run out of stories on this topic soon?
It's funny. I was just talking about that with another journalist, and we both talk about how it's like a lifetime job security thing with this topic. There's just an endless, bottomless well of these scams, and if it appeals to your sense of humor, I mean, they're incredibly dark, and some of them are quite ingenious, actually. But they just never end. I mean, is that your experience? It just seems like they never run out of this.
I don't think we're going to be leaving this post anytime soon.
Right, exactly.
Matt Taibbi, thanks so much for being on the Kaiser Report.
Thank you.
All right, that's going to do it for this edition of the Kaiser Report with me, Max Kaiser, and Stacey Herbert. I want to thank my guest, Matt Taibbi of Rolling Stone. If you want to send me an email, please do so at kaiserreport@rttv.ru. Until next time, Mac.
Okay. Kaiser Report at rttv.ru. Did you get that? KEISERREPORT at rttv.ru. I've already sent Matt an email myself. So join me. Let's connect with these guys. Let's give them stories. You heard what Matt said. It is complicated. It's difficult to write this. It's convoluted. The bankster gangsters hide it in a bunch of words. So let's help them simplify. I love some of the words. I took a couple of notes while he was talking. Wall Street mob. I love that. Rip-offs. There's a good one. On the parade, I didn't live stream this, but I was talking to somebody who was, again, bringing up to my attention that myth of the lying loans. It's all the homeowner's fault that they took a lying loan. And I responded, and I heard myself say, so I'd like to repeat this. It's not that the homeowners lied, many of them may have, but they were cheating loans. The loans were written by the banks to cheat. They cheated Truth in Lending. They cheated the homeowners. They've now cheated the insurance companies, and they cheated, and they knowingly did all of this. So I want to focus myself on making a list of how those loans cheated Truth in Lending, like it was a fake lender. They were supposed to be, no homeowner is supposed to be given a loan that they cannot repay. Every last loan was written so that they would cheat that. So I want to make a rules of how, a list of how the loans cheated, because we need to fight back against that myth that, well, all the homeowners were liars and so they get what they deserve. No. That's not it. All the homeowners were victims of cheaters. So I'm working, still mulling over, as we all are, trying to figure out how can we shift the conversation, then shift the game. But in the meantime, we need to get some prosecution. And so I really wanted you to hear that, Matt and Matt Taibbi and Max Kaiser, they're struggling too to get this information out, and let's connect with them. So send them an email. Let's connect, because the more people that send emails, the better connected we can get. I'd love to have Matt Taibbi in particular, but Max Kaiser also on Homeowners for Justice, weekdays live. And I am going to be interacting with Matt Taibbi at the Public Banking Institute convention. So I'm real excited about that. We'll talk about it later. In prep for this final push, this is the subsidiaries are handling foreclosures that pay off for B of A. You need to understand, of course, we all understand, but here's another article that we can use to understand how the banks make money foreclosing rather than just, actually modifying loans. And so B of A has found a way to make money through foreclosures by using a complicated web of subsidiaries. Like I'm telling you, they play the wholly owned subsidiary shell game. They will nest these subsidiaries as shell corporations, and they will play with them. They use all of our laws against us, as of course we totally understand, but here's some more explanation about it. And the reason I wanted to bring this to your attention first is because it's going to be talked about in the NBC investigations in just a minute. So here's a wholly owned subsidiary. Oh, they're talking about Recon Trust will file the documents to initiate the foreclosure. And mortgage servicers, they will find that they can collect late fees and late charges, and they will sometimes double those charges. No one's in charge. No one is seeing what they do or overseeing them, making sure that they do the right thing, because as you already know, and as we've discussed, the OCC, which is supposed to be regulating them, really just trying to work with them. So it says here, I want you to see this statement. For servicers, the true sweet spot lies in stretching out a delinquency without either a modification or a foreclosure. Late fees and other default-related fees can add significantly to a servicer's bottom line. And the longer a homeowner is in default, the larger those fees can be. And so, of course, you're going to have the servicers. B of A spokeswoman said properties in default are costly for the bank. But you and I know already, no, they're not. Because they're making late fees and their servicer fees, and it's not the bank's money. It's the investors that are going to take the hit. And see, they talk more about, Countrywide did a settlement, admitted nothing wrong, on and on. I mean, it's the same old, same old. So we must listen. You just got to hear some of these wonderful investigative reports. There's several. And this, I want to tell you, this is about NBC Bay Area. They talk, here's the investigative unit over here on the screen now. I've already sent them an email. Send them an email. Let's swamp these investigative reporters with connections. Let's connect. That's what I'm saying. And let's get them to help us demand a statewide grand jury investigating all of the foreclosure trustees and the attorneys running them. So listen to this. These are really good reports. They're frustrating because, again, they're telling you how bad it is. They're not telling you how to fix it. And that's where we come in. We're fixers. We got to fix this.
The economy might be improving, but still, thousands of Bay Area homeowners are facing foreclosure. And they're finding that despite all the talk from politicians, when it comes to saving their homes, the rules are still stacked against them. A joint investigation by NBC Bay Area and the Center for Investigative Reporting has discovered that there's been very little meaningful change. Investigative reporter Stephen Stock spent 9 months digging through court files and land records, talking to experts from coast to coast. He joins us now. Stephen.
Raj, it has been more than a year since 49 states' attorneys general settled with the nation's 5 biggest banks over questionable foreclosure practices. But we found thousands of Bay Area homeowners still in legal limbo. A quarter of them have been facing foreclosure for 3 years or more. This process raises questions about how much money the banks are making while the legal process stretches on. And homeowners who face foreclosure suffer all the while. A family Christmas tree stood in the corner of Joji Thomas's San Ramon home for months after the holidays, a painful reminder of some very tough times.
This is the first time in my life I didn't celebrate Christmas.
No celebration because Joji Thomas and his family faced eviction from the only home they've known since he and his wife moved here from India years ago.
But they should not do this to anybody.
In 2011, Thomas's mortgage payment doubled, and a Bank of America representative told him to pay the higher amount. You did everything they asked you to do?
Yes.
You believe you complied with everything they require?
Yes.
But because Thomas believed he was being overcharged, he stopped making payments for several months, and his home went into default. Then, to make up the difference, Thomas paid a lump sum of nearly $28,000, an amount he says he believed he was supposed to pay, an amount found on 3 different mortgage reinstatement statements sent to him by his bank. Thomas says one Bank of America representative told him the bank got his cashier's check, but another bank representative told him the bank never received it. Then, according to court records, another department at Bank of America foreclosed on his home, put it up for auction, and sold it out from under him days before Christmas.
I don't show my frustrations outside because my family depends on me. If I fall, my family falls.
Joji Thomas is not alone in the struggle to keep his home. According to Realty Track, an organization that tracks housing trends, from June 2008 through October 2010, 184,000 notices of default have been filed against homeowners in the Bay Area. That's $86 billion worth of loans, and Bank of America's foreclosure trustee handled 1 in 5 of those defaulted properties. 25% of the defaulted homes in the Bay Area have been in default for more than 3 years. That's more than 3 times the statewide average for a home in foreclosure.
This is all too common.
Experts, such as Adam Levitin, say mortgage servicing companies stretch this process out by design because it benefits them financially.
They are often not particularly motivated to restructure loans and would rather foreclose on them.
Levitin, a Georgetown and Harvard law professor, studies and analyzes the nation's mortgage and foreclosure system.
Servicers merely want to maximize the amount of their fee income.
That's Levitin telling Congress back in 2010 that the mortgage industry tacks on fee after fee that homeowners have to pay to get out of default.
Earlier this week,
Levitin has also testified on behalf of homeowners in lawsuits against banks. Take Joji Thomas's case. In the last year, he's received 4 different statements from his bank outlining what he would owe in fees to reinstate his loan. The highest was $4,200 for things like property inspection fees, foreclosure fees, and other miscellaneous fees.
Mortgage servicers are able to keep any fees that they levy, and the longer that they're able to stretch out a foreclosure, usually they're able to pile up more fees. So even if the foreclosure sale doesn't bring in enough money to pay off the mortgage loan, the servicer still gets paid. It's the investors who take it on the chin.
Bank of America's own SEC filing shows that it collected nearly $5 billion in servicing fees in 2012.
It's in the industry's interest to keep the borrower in their home.
Dustin Hobbs is with the California Mortgage Bankers Association, the only industry representative who agreed to talk to us on camera. Is this a financial model to string them along?
No. Not at all. The financial model that all servicers strive for is keeping borrowers in their homes, making their payments on time.
Hobbs says that servicers are increasingly helping borrowers make changes to their mortgages.
Servicers don't want to go to foreclosure because A, they're going to lose money, B, they lose a customer.
Would you concede there's mistakes, though?
Are there problems? Have there been mistakes in the past? Absolutely. But industry has made tangible, significant changes and improvements over the years.
I believe that I will get justice because I didn't do anything wrong.
Because he believes the bank foreclosed on him illegally, Joji Thomas is now suing Bank of America. In early April, a Contra Costa judge signed an agreement between Thomas and the investment group that bought his home at that foreclosure auction back in December. The agreement forces Thomas, his wife, and their 3 children from the only home they've ever known in America. The banks and investors now get their due, while Joji Thomas and his family wait for their justice, while having to pack up and find another place to live in the meantime. Bank of America turned down repeated requests to answer questions on camera about its mortgage servicing arm and Thomas's case in particular, saying it cannot comment on cases in litigation. A bank spokeswoman did say that B of A takes its role helping homeowners out seriously, and that the bank has made significant improvements to its foreclosure process since 2010. According to its latest annual financial statement, the bank did write off $3.2 billion in home loans. And the spokeswoman says B of A has helped nearly 300,000 California homeowners. You can see her full statement as well as the full package of stories done with our partners at the Center for Investigative Reporting. Just go to our website, nbcbayarea.com.
Figures, doesn't it? So here you got a guy who made all the payments. This is what the scary part is. They took all of his money. They take 28 grand. He thinks he's legal. Then they lie to him. Oh, we didn't get that money. And like I've said repeatedly, you got to understand this, that once you're in default after 60 days, 2 months payments, no other payment will ever go to that loan. Those payments go to an offshore suspense account, and you will be gamed and scammed. And that is what we have to make really plain. We need to get this investigative team to demand. How can they do that? I'm not sure. Help me. Help us figure out how they can find out, where did that money go? Here's, you got a story about a guy that made his payments, argued, stopped making payments, got it back in compliance, lost the home to foreclosure. And what kind of justice is that he has to leave the house because it got sold to somebody else? That is truly outrageous to me. I really don't want to think about it anymore. I'll just probably say things I shouldn't be saying. Okay. This is classic. I've got other people. There isn't anything that they've said that I haven't already heard, already seen dozens of times. And you too, I'm sure of it. Listen to this one.
Politicians say they've fixed the problem, but have they really? The nation's state attorneys general got $1.5 billion out of big banks to repair the damage.
But a 9-month investigation by NBC Bay Area and the Center for Investigative Reporting found questionable foreclosures are still happening and that thousands of financially distressed homeowners are still at risk.
Let's bring in investigative reporter Stephen Stock, who discovered a system that one expert called rotten to the foundation. Stephen.
Exactly right, Raj. We reviewed dozens of court files, hundreds of land records, and spoke with foreclosure experts from coast to coast. In case after case, we found evidence of questionable documents, robo-signing, backdated foreclosure paperwork, and instances where it's impossible to tell exactly who owns what. 75-year-old Terry Mason bought and fixed up her dream home in the Oakland Hills a decade ago.
Well, in this case, it's not the property, is the note.
When the economy tanked, she fell behind on her mortgage payments to Bank of America, and now her home is in foreclosure. A foreclosure Mason considers unlawful. The proof, she says, is in her paperwork.
There is something fishy here.
Although Mason shared her private loan documents with CIR and NBC Bay Area, she declined to sign a waiver that would have allowed Bank of America to discuss her case, saying she feared retribution from the bank.
There ought to be a very clear chain of title.
We asked 3 different forensic, fraud, and property record analysts to analyze Mason's paperwork. 2 of them have testified as experts for homeowners in lawsuits against banks. All of them found loan documentation riddled with inconsistencies.
There's no transparency, and that is deliberate.
That's why Mason filed suit against Bank of America and its subsidiary, Recon Trust, the foreclosure trustee, alleging that her mortgage had been illegally transferred. The suit also alleges that multiple documents were robo-signed by someone named Tina Civiano, who just days apart purported to be, on the paperwork, the assistant secretary of 2 different companies. Civiano later confirmed for us that she did not work for either of these companies. Instead, she worked for Recon Trust, overseeing Mason's property records. When it comes to you versus the banks, do you have the same rights?
Of course not. Of course not.
Mason's lawsuit against Bank of America was later dropped. But during the last 9 months, NBC Bay Area and the Center for Investigative Reporting uncovered similar questions in other foreclosure actions across the Bay Area. And a study of 382 mortgage loan transactions for San Francisco's Assessor Recorder's Office also found questions about the legality of the vast majority of those cases.
84% of the time we found in those almost 400 foreclosures that there was at least one violation of law.
Phil Ting ordered that audit in 2012 while he was assessor recorder. Ting is now a California assemblyman, trying to change the system with legislation.
You know, we saw instances of backdating, instances of people, you know, starting with this name, and this name was the actual one on the loan, but now this other entity was now the one foreclosing. You know, that's what we found over and over again.
Well, it goes to the fundamental questions of property rights.
Adam Levitin, a law professor at Harvard and Georgetown Universities, is a mortgage expert who has testified numerous times before Congress and on behalf of homeowners suing banks.
Basically, nothing has changed on the ground as a result of the settlement with the attorneys general.
Levitin says banks often lack the legal authority to foreclose because documents on file with the courts around the country show that banks don't actually own the loans. Even so, he says, lawmakers don't know how to address this problem.
If regulators actually started pushing on the adequacy of the paperwork, they would find that it's just a termite's nest of rot.
The question of who owns the loan or not, I think that's also something that's been blown out of proportion.
Dustin Hobbs, a spokesman for California's Mortgage Bankers Association, says too much is made of the issue of legal paperwork in the foreclosure process.
And I think you talk to the investors, you talk to the servicers, they know who owns the loan. There's no, I don't think you see lenders and servicers running around saying, well, I don't know who owns my loan. I don't know where this loan came from.
Though Bank of America refused to answer questions on camera, a spokeswoman did email a statement saying B of A has made significant improvements to our foreclosure process since 2010, and that upon request, the bank will provide homeowners documentation proving the bank owns the loan, a process put in place before California's Homeowner Bill of Rights became law. Critics say that new law, which took effect 4 months ago, has failed to address this critical issue.
They should have an obligation to prove that they own a loan.
Michael Yesk is an attorney for distressed homeowners. Yesk has sued several banks, sometimes successfully, for wrongful foreclosure because the banks could not prove that they owned the property or the loan. There are still homeowners out there being foreclosed on with no paper trail.
Every day.
Assemblyman Ting tried introducing legislation to fix this problem, but it failed to pass in Sacramento.
That is not the law.
So I can foreclose on you without a clean chain of title right now, under the law.
That is the law.
After we began investigating her case, Terry Mason's home was taken off the auction block. Mason, herself a mortgage consultant, says she has faith that she will see justice win out.
But I believe the system will prevail.
Now, this new Bill of Rights does allow homeowners to ask for certain documentation from banks, But critics say the new law does not go far enough. A Bank of America spokeswoman said its subsidiary, Recon Trust, does now have quality assurance checks in place to guard against errors and that it does not backdate documents. You can read her full statement and see the entire package of stories done with our partners at the Center for Investigative Reporting on our website. Just go to NBCBayArea.com. Raj, Jessica?
Okay, Stephen.
So because Recon Trust doesn't backdate documents anymore, they'll see it's done right. This is truly amazing. And in my email to the investigative team, I said that it is absolutely unconscionable and unbelievable to me that there is so much fraud and nothing is being done about it massively, like at the state level. And I asked them to help us support a statewide grand jury investigation. And in that investigation, of course, I've already made it clear to the Attorney General's office, the prosecutors in which I've discussed this, I want an injunction. We need to request injunctions. That means the judge stops all activity for all foreclosure trustee companies operating in California. Actually, for those of you that aren't in California, I would do the very same thing for your state, and we need to do this nationwide. We need to actually try to get senators and congressional reps at the federal level to do a federal investigation, but that's a lot of work, and so we have to just start where we can start. If you can connect with them and get them to work on that, that'd be fabulous. But we need an injunction against these foreclosure mills because every last one of them is generating forged documents. I wanted to bring to your attention, I'm sure you've already noticed on the screen, and you can, of course, link into this site. Either you already have, or once I put the link on the comment section. Here's all of these reference documents that from B of A and some of the mortgage and loan documents and the complaints and MERS Corp response to Phil Ting's audit, those kinds of information. I haven't even had a chance to look at it. I just got this link and then I've been busy this weekend. I did want to play another one. These are fabulous individual little reports. They submitted them night after night. And here they are. They originally aired just last week and over the weekend. So let's listen to this one.
There's a good chance some of your neighbors or friends are feeling the pinch. Thousands of Bay Area homeowners are still facing foreclosure and an uncertain future. And we found in some cases the rules are stacked against them. A 9-month investigation by NBC Bay Area and the Center for Investigative Reporting discovered that despite the changes in the law, stressed homeowners are still suffering at the hands of big banks. Investigative reporter Stephen Stock is here now to explain. Stephen.
Raj, California's new Homeowner Bill of Rights, which just became law this past January, has provided some relief for homeowners facing foreclosure. But we discovered the law has some big holes in it, and it has not fixed all of the problems that underwater homeowners face in the fight to keep their homes.
You're getting to run around all the time.
Ricardo Rodriguez fights frustration, trying to navigate a home loan modification process that he says never seems to end. He's tried and failed to get 10 separate modifications on the San Francisco house he and his family have called home for more than 20 years.
And I'll wake up like sometimes at night, and the first thing I think about is, what's going on with this house.
Part of California's new Homeowners Bill of Rights requires that banks appoint one person or one team to serve as one point of contact between the bank and homeowners trying to get modified loans or otherwise avoid foreclosure. The Rodriguezes have had, so far, 7 different points of contact from their bank, Bank of America, in less than 3 months.
My opinion is the right hand doesn't know what the left hand is doing at that bank.
All the while, Rodriguez has racked up fees while he waits. According to 2 different documents, in order just to attempt to get his loan and mortgage reinstated, Rodriguez would have to pay anywhere from $2,000 to $2,300 just in fees and expenses. That's almost as much as his monthly mortgage payment.
It has been very, very tough.
Ricardo Rodriguez and his family are not alone. During the last 9 months, NBC Bay Area and the Center for Investigative Reporting have uncovered persistent problems with home loans and mortgages facing foreclosure. Problems that were supposed to be fixed by California's new Homeowners Bill of Rights. Problems that were supposed to be taken care of after a settlement last year between 49 different state attorneys general and the nation's 5 major banks.
The challenge is this problem still is not fixed.
California Assemblyman Phil Ting saw the problem firsthand as assessor recorder for San Francisco.
Well, I think it's documented that, my report documented that 84% of the time we found in those almost 400 foreclosures that there was at least one violation of law.
And this is still happening today.
It absolutely still happening today.
In an email, a spokeswoman for Bank of America admitted it assigned multiple points of contacts to Rodriguez because she says he continued to ask the bank for help. The bank spokeswoman said B of A lowered his mortgage rate to 2% and he still could not meet his payments. You can read the entire statement as well as an email Q&A with B of A at NBCBayArea.com. Now, coming up tonight, we will take you behind the scenes of another family's fight to save their home with an ending you might find hard to believe.
And that ending that he's talking about is the first guy who made all his payments and now he's got to leave the house. And he's saying he depends on the justice system working. You and I probably are more cynical right now than he is. Now, here's another link I'm going to show you. I've got this link to HOFJ.org. This is the Equitas report that was repeatedly mentioned in Phil Ting's audit. This is the audit that he'd had done when he was the assessor recorder of San Francisco. So there's the report. You can read it yourself. They itemized the laws that were broken. And like I said to the Center for Investigative Search, these folks at NBC, the fact that we already know they're breaking the law and nothing is being done about it, like getting the homes back for those owners that were defrauded, is just outrageous to me. Now, I sent them a copy of this link, and this is the link in my foreclosure defense workshop category on my live stream. And you understand, on the live stream channel I have different icons because I decided I was going to have different types of live streams. So we have weekdays live, and all the weekday live shows are under that. And under the foreclosure defense workshop, which is where I put this, it's under that icon. So you're not going to find this if you go to the weekdays live, but you're going to find this. This is the Attorney General presentation of the Recon Trust document violations. And I went through 18 properties. They were all Recon Trust foreclosures. Some have been foreclosed, some have not. And some, I think one was rescinded. Forgive me, this was last month. But nevertheless, I did this on March 11 as a presentation to the Attorney General prosecutors in that office, the staff, because I could tell from my conversation with them initially, they didn't understand what I was talking about. And I do believe this goes back into what Taibbi and Kaiser are talking about. It's complicated. You and I understand more about this. We've been activists for months, years. And we've been researching this, and we've been sharing and understanding and discussing. We have, hundreds, if not thousands of hours of self-education put into this effort. Most people don't have that. They're starting from ground zero. So after I did these analyses and I put together the worksheets, because I did basically, I believe it's number 6 on my foreclosure defense, which is analyze your recorded documents. And I combined that for each one of these foreclosures that I reviewed. I got all the recorded documents. I reviewed all of the foreclosures. I pulled out all of these issues which are on the owner's statement of suspicious documents. So did they have a false notarization? Did they have a forged signature? Did they have assignments that were recorded after the notice of default, which is not legal, although that the banks are getting away with that? Is the servicer illegally named as a beneficiary, where they just say, okay, now the servicer gets all the benefits, now they're the beneficiary? That's illegal. Did they name an impossible beneficiary, like the new beneficiary is the trustee of the mortgage-backed security? That's impossible. A bank, MERS, cannot do that. It's impossible, and yet they do it. They do it in the recorded documents. They send the document. It gets recorded. They take the house. Who's going to stop them? And if you notice right here, just on this little screenshot that I use as the highlight of this video, by the time you add up all of these violations, none of those foreclosures are legal. That's all void. Every last notice of default, notice of sale, or trustees' deeds and new grant deeds to the new buyers, they're all void. They're not even voidable, they're void. They're based on forged documents. And you can't have a legal transaction of any kind, a foreclosure or a sale, on a void document, on a forged document. That's case law in the state. So we must get the Attorney General's office to do a statewide grand jury. We must demand that. And this is what I want to tell you, that I got some help at the parade. And it turns out that one of the people marching in the Petaluma parade on behalf of Occupy and the 99%, that's you and me, they actually are on the Democratic committee in this county. And I was belly aching about the fact that here I've already found all this forgery. I've already sent it to the Attorney General's office, and I don't see any statewide grand jury starting up. So, rah. And he says, well, if you really want to shake up the Attorney General, why don't you submit a resolution to the Democratic committee, and we'll review that, and we'll have you come in and share it with us, and then we'll vote for it, and we'll send it out to all the county committees, and then they'll all vote for it, and the Central Democratic Committee will make an announcement on this resolution that they want the Attorney General to impanel a statewide grand jury and get injunctions against these foreclosure mills. So come on, guys. That's our effort right now. We must do this. I'd love to have it done, before the end of the week. So this is how a resolution looks. Basically, it's a whereas this, whereas that, whereas, and then therefore be it resolved. And so I have put up here on the screen a couple of things that have occurred to me. I would like to definitely address the Doc X settlement, whereas LPS and Doc X have been found guilty of generating fraudulent foreclosure documents. Help me write these, okay? Help me write these whereases. And whereas, these properties were based on forged documents, help me come up with ideas. Here, I wanted to show you, I think I lost it. I had a resolution that I'd already done. We did this last year. We did this for the Homeowner Bill of Rights, trying to get the county supervisors to resolve that they would support the Bill of Rights. And basically, it's a bunch of different whereases. And then, be it resolved, the supervisors would support the Homeowner Bill of Rights. So what we want the resolutions at least, to have the Attorney General impanel a statewide grand jury for investigations. I think I'd like to add here during the investigation, to have an injunction against all foreclosure paperwork being filed in the state from these major foreclosure mills, or it could be from securitized loans or from the mega banks. We need to work on the wording. So please, if you have any suggestions on a whereas or a resolution, just send me a little paragraph. Try to write that up. Send me the point. And I've already got a couple of people that are helping me to sort of draft this, get this into a package, because I'd like to send that resolution suggestion to the Sonoma County Democratic Committee. And if you can connect with the committee in your county, then we can send it to all of these at once. I know I've got some really strong activists in a variety of counties around the state of California. So let's do this now. Let's do this now. And in the process of giving them this resolution, let's make sure that every contact we know of sees these investigative reports from NBC. These are powerful reports. These are other people, not just us, not just homeowners, talking about the forged paperwork. Let's connect with Phil Ting. I didn't even know until I heard it today that he had tried to pass some legislation to fix this problem. Let's find out what that is, and let's see if we can't put that in this resolution. Let's use our heads. Let's work smart. Let's try to get these people that are already there open, willing, and interested in partnering with us. Let's get them to partner with us. And then I definitely wanted to make one more comment about tomorrow. I'm not going to live stream Weekdays Live tomorrow because I'm going to be down in Marin County. I'm going to join Julie. I'm going to live stream this, probably using my phone again. I think that worked out okay, although I apologize. I haven't looked at the streaming, and I'm not sure it all streamed well. But of course it's on my phone, so I can upload it if it didn't work right or whatever. But nevertheless, I'm going to go down tomorrow to the Marin County Supervisors meeting. It's right at 3501 Civic Center Drive, room 329 in San Rafael. And Julie is going to submit. The supervisor meetings, of course, have their little 3-minute segments. So you can put in a name and say, I want to stand in front of the supervisors for 3 minutes and say whatever's on your mind. And that's a nice little event. So she's going to do that. And she has already sent them certified mail, her entire package, foreclosure documents and the whatever else that is in that package. I've not yet seen it. She's been busy, I've been busy, but she will have those documents there with her. I've asked her to give me a copy so that we can upload it for everyone to review. I've already had requests from several people, of course. I want to see what she did so I can copy, let me get my paperwork in order. It's a challenge. It's a really tough challenge, and anybody fighting foreclosures knows this. So if you can, please join us. I know that there's a couple of people already talking about joining us. It would be great. The more support, the better. And I'm going to have my Homeowners for Justice name tag, and we can make a presence at the supervisors. Marin County, by the way, is one of the wealthy counties in California, and there are people there getting cheated and jerked around and losing their homes, just like the people in Oakland. It doesn't matter. It doesn't matter how much the property is, whether it's very expensive or not so expensive. The servicers are cheating everybody. And it doesn't matter on these people. If they try to make their loans current, they're going to lose the house to foreclosure anyway. Just like that person that was interviewed on NBC and showcased on one of those shows. So if you can join us tomorrow, that'd be great. I'm going to live stream that in the morning. I've put the time up as about 8:15. I'll probably, maybe live stream some, maybe not, maybe turn it on and off. So it may not necessarily be a consistent long-term stream, but several short segments. We'll just take it as it goes, and that way at least you can join in the event, either live or archive, and see what it's like to present to the county supervisors, because it's going to be the same virtually everywhere. So maybe this will give you courage to step up to your county, even if your county's in Tennessee, Pennsylvania, Florida. I hear from people everywhere. Please take, even if you have just one document? What if you have just one forged document with a obviously forged signature or a fake notarization or an impossible beneficiary on it? Just take that one document and say, look what they recorded on my property. This is a lying document, and they caused it to be mailed and recorded. And both of those things, if I had done that, I'd be in prison. So let's make this effort. Let's make it simple as we can. So don't worry about having to make a whole presentation, because a lot of times it's just so much work you just can't get there. But if you just had one document and stood up in front of your supervisor, in fact, you could do one every however often they meet. If they meet every week, then go every week with a new document. That gives you 3 minutes to talk about that document and how they forged this and how they forged that on that document. And then the next week see, here's the next document that they cheated me on. This is a cheat. These are lying, cheating thieves. And they did this and this and this wrong on this document. Something to get the word out. Let's for sure, if you do your owner statement of suspicious documents, let's be sure you send it to the NBC investigative unit. All right. So I've been I'm hearing myself tell myself, I need to work on this. I need to, we have so many things to do. Thank you guys so much for joining us. Thanks for supporting us. Thanks for working with this on us all. Thanks for the work you do on behalf of all the homeowners in this country and the planet, because I'm telling you, these bankster gangsters are cheating and robbing the entire planet. And I really now feel badly because I haven't done more to stop these banksters from ruining the lives of untold millions of people. So today, let's take heart. We can bugger the bankers. Let's continue to take that effort out there. Bugger them, the bankers, the politicians, and the bureaucrats. See ya tomorrow on live stream at the Marin County Supervisors, and then Wednesday we'll be back with Weekdays Live. Bye.
They told me to fight for my civil rights, but it's always the same old story. The rich reign supreme while the poor can but dream under Labour or Liberal or Tory. And I say, bugger the bankers and politicians, bugger the bureaucrats too, bugger the buggers who make up the rules. And if you're one of them, bugger you. And if you're one of them, bugger you.
The system is bent and the money's all spent.
We're murdered from every direction.
The workers get taxed while the wealthy relax. With nary a moment's reflection. Where there's brass, there's muck, and they don't give an arse, 'cause they're programmed against insurrection. And I say, bugger the bankers and politicians, bugger the bureaucrats too, bugger the buggers who make up the rules. And if you're one of them, bugger you. And if you're one of them, bugger you. Now all you good people with passion to vent, don't give up the struggle for justice. But I've done my time on the protesters' line, and these days I show my dissent by loitering within my tent. And I say, bugger the bankers and politicians, bugger the bureaucrats. know